As you heard today, we joke around that we have the easiest job in the world. There's only two things we have to focus on: earnings and price to earnings. And the price to earnings of the market is pretty attractive. So a major spike in interest rates next year would be a concern. We just don't see that happening. So a bigger concern over the next 12 months is probably the earnings of the market. If there's some crisis like we had in '07 that would hit the earnings of our companies, that would definitely have a negative impact. Global markets, Europe actually sounds like it's getting better, but the emerging markets are struggling. So I think it's selective on where the earnings are going to get hit, but if we're worried about something in 2014, I would say the earnings would be something I'd be focusing on more than the valuation of the market today. Now hitting 16,000, that's a great question. We're not only surprised it hit 16,000, we're a little more surprised that we haven't had a 10% correction in many, many months, which is usual along the way. Just remember that 15 years ago, the S&P and the Dow weren't much lower than where they are today. So we've digested a lot of earnings over the last 15 years, and the valuation of the market, even though it's up a lot in the last 3 or 4 years, is still well below where it normally is in a 1% interest rate environment. So the Dow hitting 16,000 we think is a stepping stone along higher road. The fact that it's done it so orderly with very little pullbacks, that has even surprised us.